What's up, guys? My name is Nate Fisher. I'm with eXp Realty. I've been licensed for 7 years now. If you like real estate tips, market updates, home buying advice, and DFW content, make sure you like this video, subscribe to the channel, and turn on notifications. Today, we're going to be talking about the hidden cost of owning a home. And before we get into it, I want to give credit to a Homes.com article written by Brad Case that got me thinking about this topic. And the rest of the video is really going to be my take on how buyers should think about the real cost of owning a home, especially here in Texas. First off, your mortgage is only one portion of the cost. So, with that, whenever a buyer gets pre-approved, it's really easy to look at one number, the monthly payment. Maybe your lender tells you that your house you're looking at is going to cost around $2,600 a month, and you think, okay, I can handle that. But once you're down and you own the house, there are other expenses that start showing up. You may have lawn care, higher utilities, pest control, an HOA, high water bill, sprinkler repairs, and you have big stuff that can hit without much warning. That's why I want buyers asking a different question. Not just can I afford the mortgage, but can I comfortably afford to own this property? Because those are not the same thing. With that, right? Have a separate home reserve. One thing I really like to see homeowners do is keep a monthly specific amount set aside for the house. Not your vacation fund, not the money you use for everyday expenses, a reserve for maintenance and repairs. Because homes don't usually break in a nice predictable monthly payments. You might go months without spending much at all. Then suddenly you have 2 to 3 things happen at once. And here in Texas, some of those repairs can get expensive fast. Now, in the article, Brad mentions a 1% rule. I think that this is honestly great. It basically means that budget roughly 1% of a detached single-family home's value per year for maintenance and repair. So using that framework, if you want a $450,000 home, you'd be looking at around $4,500 a year, or roughly $375 a month. Again, the 1% rule itself comes from that article. Now, I would not treat that 1% as a perfect formula. Every house is different. A new home may need less in the short term. An older home with aging systems may need more. But I do think it's a useful way to force yourself to think beyond just a mortgage payment. You may not spend that amount every year. You may spend much less one year and a lot more the next. The point is having the money there before something breaks. What I'd watch closely here in Texas, now this is where I want to make specific what I see here in DFW. There are 4 areas that I want home buyers paying close attention to: foundation, HVAC, roof, and plumbing. Foundation first. North Texas has expansive clay soil, and movement can happen over time. That doesn't mean every crack is a disaster, but drainage, grading, foundation movement, and signs of prior repairs are things I want buyers to understand before closing. If an inspector sees something concerning, that may be a situation where you bring in a foundation specialist. The important thing is knowing what you're buying. HVAC. Second, it's, guys, HVAC. This is a huge one in Texas. Our AC systems work hard, especially during the summer. Right now, it's like 109 degrees outside. So if I'm showing you a home and the HVAC system is older, I want you to know that. Not because an older unit automatically means don't buy the house, but because replacing an old HVAC system can be a major expense, and you should plan for the system getting towards the end of its life. Third is going to be the roof, right? North Texas gets hail, high winds, and severe storms. So the roof age and condition matters. You want to know how old the roof is, whether there's prior storm damage, or whether there's signs of leaks or deferred repairs. Again, that doesn't automatically mean kill the deal. It just affects how you should evaluate the house and what you may need a budget for. Fourth is plumbing. And guys, I made this mistake. Depending on the age of the home, you may be dealing with older supply line, drain lines, water heaters, or previous repairs. If you start dealing with drain lines, guys, it can be very, very expensive. Now, can plumbing problems also be small and annoying? Yes, but they can also get very, very expensive. That's why I don't want buyers just looking at the countertops and flooring. I want them thinking about the systems behind the walls too. With that, the inspection is about information. This is one of the biggest reasons I'm such a believer in inspections. The inspection is not just here so you can make a giant list of little repairs and ask the seller to do everything. The inspection gives you information. It tells you about the house you're about to own. If the HVAC system is older, if the roof has a limited life left, the water heater is getting up there, or an inspector sees signs of foundation movement, I want you knowing that before closing. Then make an informed decision. Make sure the house still makes sense. Maybe you negotiate, maybe you budget differently, or maybe you decide it's not the right property. But at least you're not finding out 6 months later. Now, another example from Brad's article is that the idea of directly comparing rent to a mortgage payment can underestimate the true cost of homeownership. The article gives an example of a renter paying $2,500 a month and then buying a home for $2,500 a month mortgage payment. On paper, that looks equal, but the article points out that once you own a home, you're now responsible for maintenance that was previously handled by a landlord. The specific examples come from the article. I think the practical takeaway is important. Don't compare rent to mortgage alone. Compare rent to the full cost of home ownership. That includes maintenance, taxes, insurance, utilities, and any HOA fees. Next, guys, the cheapest home isn't always the cheapest to own. This is my advice to buyers. The lowest price homes is not always the cheapest home to own. That's set. Let's say one home is $15,000 cheaper, but the HVAC is older, the roof is getting up there, and there's also plumbing concerns, and there's signs of foundation that may need more evaluation. Then another home that costs a little bit more, but has newer systems and has clearly been maintained. The cheaper house may not be a better deal, but you have to look at the entire picture. Purchase price is only one piece of the decision. With that, guys, don't max out your approval. And one thing I tell buyers, just because a lender says you can qualify for a certain amount doesn't mean you need to spend that amount. Your lender is looking at your financial qualification. They're not necessarily deciding how much breathing room you want every month. They don't know your travel plans, your saving goals, your future car purchase, or how comfortable you are whenever a major repair pops up. I'd rather see somebody buy a little bit below their maximum and have room to handle life than stretch all the way top and feel stressed every month. So the big takeaway is this. Don't just ask, can I afford this mortgage? Ask, can I comfortably afford to own this house? That means thinking about payment, taxes, insurance, utilities, HOAs there, if there is one, and maintenance. And here in Texas, I specifically want you thinking about foundation, HVAC, roof, and plumbing. Again, I want to credit Brad Case in the Homes.com news article for that inspired topic, including the 1% maintenance rule. I think that it's very, very good. And guys, again, my name is Nate Fisher. I'm with eXp Realty. If you're thinking about buying, selling anywhere in DFW, you want to help understanding what you're actually getting into before making a decision, feel free to reach out. My number is 469-525-8751. And if this video helped you, make sure you hit the like button, subscribe to the channel, and turn on notifications. I'll see you on the next one.